What happened with the Korean markets in July? And what happened to a lot of everyday investors? This is an example of individual investors losing in the market because of risk, leverage, investor psychology, market power, and being forced to sell at the worst possible time. Quick summary, the market down 16% in 2 days. Margin calls wiping out accounts of individual investors. Then a market recovery on Friday, where a lot of individual investors missed out on the recovery. So here's the context. A lot of individual investors in Korea were using margin loans and 2 times leveraged ETFs. The government enabled this with the logic of keeping more funds in Korea and invested in Korean companies. As well, Samsung and SK Hynix accounted for over a half of the Korean stock market. So the index is basically 2 companies. Meanwhile, foreign institutions had been net sellers for 6 straight months, and individual investors were the ones buying. Then the additional triggers that caused the market crash. Tuesday, news breaks that China started mass producing its own chip-making equipment. Index down almost 11%, trading halted. Wednesday, SK Hynix reports record revenue and record profit, and it still comes in under what analysts expected. Halted again, second day in a row. 2 days, down 16%. That's when the margin calls take over. Prices fall far enough that brokers start selling people's positions for them. That selling pushes prices lower, which triggers more margin calls. Then, Thursday and Friday, institutional investors buy back in. Index up 17.9% on Friday. Foreign investors buy a record 7.2 trillion won. Individual investors sell a record 8.3 trillion. A few takeaways from this for long-term investors. Big firms are doing much more analysis than you, such as analyzing how much margin has been invested and estimating when that margin will be exhausted. They're going to see things before you do and act on them with faster technology and enough money that their trades move prices on their own, both up and down. As well, most people should not use leverage based on how the rules of margin calls work. What to do instead? Use a tool like Advizmo that is designed for long-term investors. It takes the emotion out of personal finance and investing. It consistently invests in broad market ETFs regardless of what is going on in the markets. It doesn't try to time the markets, but it does take advantage of tax loss harvesting and tax optimized selling, so that whenever the market does go down, you get a tax break while you stay invested for when the market recovers. All this automated. Check it out.